Hello guys, and welcome to another weekly news video. I'm Styliana Charalambous, the head of investments and market research at Pure Fintech, and in today's video we're going to sum up the previous week's highlights and see how the markets reacted on the news. Moreover, we will have a look on the major economic events of the current week. The most important event of the previous week was clearly the FOMC meeting. Risk assets fell sharply in the wake of the FOMC meeting overnight, with Fed Chair Powell sounding hawkish even if he tried to be measured. The headline, of course, was the Fed tipping their hat to a March rate hike and for QE to end in March. Key for the markets were a comment that pointed to the risk of an aggressive Fed hike cycle. Fed Powell noted that he thinks there is quite a bit of room to raise interest rates without threatening the labor market. It suggests that the Fed thinks it can raise interest rates substantially and above the terminal rate that is currently priced by market, which was at 1.7%. Now let's move on and see what happened in the crypto markets in the previous week. President Joe Biden and his administration are still expected to use an executive order in the coming weeks that will likely dictate the US government narrative on cryptocurrency and digital assets. The directive is expected to instruct various government bodies to study digital assets and perform risk analysis on the crypto market. Biden's viewing of cryptocurrency as a national security may have contributed to the constant rejection of Bitcoin spot ETFs in the nation and stems of cryptocurrency's relation to cross-border money moving. According to a report by American asset management firm ARK Invest, Ethereum's total market cap will reach $20 trillion by 2030. This would result in a price of $170,000 to $180,000 per Ethereum. The firm has estimated that decentralized finance has outperformed the traditional financial sector in terms of revenue per employee at $88 million versus just $8 million respectively. Now guys, let's move into the current week's news. We have the worldwide manufacturing and services PMIs. Amid the spread of the COVID-19 Omicron variant, worldwide manufacturing and services PMIs will be watched intently this week for indications of how the global economy has fared at the start of 2022. January flash PMIs alluded to sharp slowing in developed world growth, with the United States growth notably slipping to an 18-month low. Japan and Australia, meanwhile, fell into their third economic downturns of the pandemic as the Omicron wave hit, though the UK displayed some encouraging economic resilience in the face of the Omicron variant spread. Now let's see the January jobs report data, what will happen in the current week. The turn of the month brings the January jobs report from 238,000 addition for non-farm payrolls, while the unemployment rate comes in at 3.9% and average hourly earnings grow by 0.5% month on month. That's all the news for the current week, guys. Also, that's what happened in the previous week in the markets. If you have any questions or if you want to open a trading account with us, you can contact us through our website or our social media. We'll be more than happy to help you. Thank you for watching and wishing you a profitable trading week.